Welcome to Inside India, the Tuesday edition. I'm Sri Jegarajah. Here are your headlines. Markets rally after the US and China agree to significantly lower their tariffs in a 90-day reprieve as the two sides continue to talk. And we continue to track India's pharmaceutical sector after President Trump signed an executive order to lower drug prices. And Indian Prime Minister Narendra Modi warning Pakistan against further strikes in his first public comments since the ceasefire was reached. Welcome to the programme. So a gap higher in the Indian markets and an even bigger gap higher for Pakistan's benchmark after that ceasefire announcement yesterday. The Indian markets join us in about 45 minutes' time. Let's take a look at Gift Nifty futures for any indication as to whether that momentum is going to continue, given the global backdrop and given the progress and the feel-good factor in the markets after the US-China trade deal and what's being characterised as a breakthrough in Geneva. We should see some follow-through in the Indian markets. Gift Nifty futures are giving us an opening number in the region of 24,916. So, comparing where we left off yesterday, probably some consolidation just around or just below this 25k handle, although it's conceivable that the benchmark Nifty could make a run and could take out 25,000 today. Let's wait and see. Let's give you the dollar-rupee exchange rate sitting below 85, 84.7910. As I said, tariff relief across markets today. The US and China agree to roll back levies for at least 90 days, giving them more time to negotiate. America's rate on China is now 30%, including the 20% of fentanyl tariffs imposed in February and March, while China's tariff rate for US goods is now 10%. President Trump has also called on Beijing to look at non-tariff barriers, but the United States is not backing away from its plan of decoupling from China. Here's what Treasury Secretary Scott Bessent told our colleagues overnight.
One of the most important things that we're doing, we do not want a generalized decoupling from China, but what we do want is a decoupling for strategic necessities, which we were unable to obtain during COVID, and we realized that efficient supply chains were not resilient supply chains. So we are going to create our own steel, protect our steel industry, the work on critical medicines, on semiconductors. So we are doing that, and the reciprocal tariffs have nothing to do with the specific industry tariffs.
Let's get out to Emily Tan in Hong Kong, tracking the reaction to the tariff truce in the Chinese markets. And Emily, if you look at your market in Hong Kong, the Hang Seng is somewhat counterintuitively down by 1.4%. So clearly investors there believe some work needs to be done between the two sides.
Yeah, that's right. We had an initial rally yesterday into the close, up 3% for the Hong Kong market, and maybe just putting that on pause today as the Hong Kong market is the underperformer in the Greater China region and looks to be the only market that is seeing some downside across Asian trade today. If we could pull up the markets and we can show everybody that the Hong Kong market is pulling back by about 1.5%, but we've seen an 8-day run in the market. We were up 7.2% up until yesterday. The CSI 300 was also rallying quite nicely. In terms of the markets, we're also tracking some slight positivity for the Shanghai Composite, which is traded higher by 0.1%. The Shenzhen Composite down by 0.1%. Now, in terms of what has come through here, it's being hailed as a success from China's perspective. Morgan Stanley expects a substantial positive catalyst for Chinese markets in the near term, expecting this to attract fund flows and serving to alleviate some of the concerns with regards to a potential earnings shock. Over at JP Morgan, they're saying that the magnitude of the tariff reduction is larger than expected, with both sides, the U.S. and China, recognizing the the economic reality that these tariffs are going to be hitting growth. So they expect the market to get back with risk on sentiment. So we are watching some of the trade proxies. If you do have any of those, are worth watching out for names like CK Hutchison, Lenovo, as well as Tektronic Industries, Yuyun Industrial. These are, of course, big exporters to the United States. CK Hutchison, for its part, has a port deal that is ongoing, and they made their first comments to the port deal ahead of their AGM on May the 22nd, saying that it is impossible for the Panama port sale to proceed under any illegal or non-compliant circumstances. The completion will be dependent on fulfilling conditions like legal and regulatory approvals and securing shareholder approval as well. So we are seeing some downside for the market here in Hong Kong today. And Sri, we do have President Xi Jinping just wrapping up some opening remarks at the CELAC summit, and he has said that there are no winners in tariff and trade wars, and only when various countries work together can they maintain world peace, stability, and promote global development. This as U.S. and China de-escalate. And now we're waiting on a potential call between President Xi and President Xi. No confirmation yet, but we are waiting. Back to you.
That follow-up dialogue is as critical as the Geneva talks. Emily, thank you very much indeed for that. In the meantime, President Trump saying that his administration is ready to help India and Pakistan after the ceasefire that the US claims it brokered at an event at the White House. President Trump said trade is a big reason why the two countries stopped fighting.
They did it for a lot of reasons, but trade is a big one. We're going to do a lot of trade with Pakistan. We're going to do a lot of trade with India. We're negotiating with India right now. We're going to be soon negotiating with Pakistan. And we stopped the nuclear conflict. I think it could have been a bad nuclear war.
Now, the Directors General of Military Operations of India and Pakistan also spoke to each other yesterday and discussed commitments to avoid initiating, quote, any aggressive action against each other. A few hours later, Indian Prime Minister Narendra Modi gave his first public remarks since the crisis broke out. Prime Minister Modi said India will respond strongly if there is a terrorist attack in the country.
If Pakistan wants to be saved, it will have to destroy its terror infrastructure. There is no other way to peace. India's stance is very clear. Terror and talk cannot go together. Terror and trade cannot go together. And water and blood cannot flow together. India will not tolerate any nuclear blackmail. India will strike with precision and decisiveness on a terrorist bases flourishing under the cover of nuclear blackmail.
Shortly after Prime Minister Modi's address, reports of drone sightings emerged from parts of Indian-administered Kashmir. Over in Pakistan, markets cheered the ceasefire with India. The Karachi Stock Exchange surged over 9% amid worries of the economic impact from a conflict with India. The country's finance minister saying there won't be a large fallout.
At this point in time, I do not see any large fiscal fallout coming out of it. And if you've seen the stock market rebound today, the big drop that we saw in Friday has been more than well covered in the PSX today. So from my perspective, at this point in time, we don't see it as a major issue and can be very much accommodated within the fiscal space which is available to the government of Pakistan.
Let's bring in Shilpak Ambule now, India High Commissioner to Singapore, joins me here on Inside India. Ambassador, thank you very much indeed for joining me this morning. Now, as a career diplomat, I'm sure you've witnessed many flare-ups involving India and Pakistan before. Do you believe this current suspension or ceasefire will hold?
Well, the ball is in Pakistan's court, but from our point of view, we've made it very clear what we call as Operation Sindoor is our new terrorism policy. It is a new policy with which we fight terrorism. It will have three elements. Any terrorist attack will get a befitting reply. The nuclear blackmail will no longer work. Any hideouts under the cover of nuclear blackmail will be targeted. And third, and importantly, terrorists, there will be no distinction between terrorists and the government sponsors of terrorists. So these three elements form a new normal, a new parameter and a new benchmark for our way of fighting terrorism.
So in other words, Ambassador, am I correct in saying that Pakistan's military infrastructure, if you feel due cause, is a legitimate target?
Well, if you see what happened on 22nd of April, there was a heinous barbaric terrorist act in India. And our first response was limited only to terrorist infrastructure across the border. Only terror camps, only terrorists and terror-related infrastructure. It was the Pakistan side which retaliated and targeted civilians, hospitals, colleges, and our military targets. So our retaliation to their escalation was not taking out, but rather striking the military targets from which action was being taken. And then once that happened, the Pakistan DGMO came in contact with our DGMO saying that we want to cease fire. And after we got an assurance that there will be no more firing from the Pakistan side and there will be no more terrorist acts, then we agreed for the ceasefire.
Pakistan claims that it offered India the opportunity to investigate what happened and the cause and the perpetrators of the Pahalgam attacks. And it claims that India did not respond to that overture. What do you have to say about that?
I think we never got an offer from Pakistan, number one, on investigation on terrorists. Second, we've seen this long enough. Every time they come up with this farcical offer. Third, and most importantly, at the UNSC Sanctions Committee, we've been giving proof for the terrorists residing in Pakistan. Even the organization which was responsible for the Pahalgam attack, the TRF, we've been giving information about them to the Sanctions Committee for the last 2-3 years.
Ambassador, I want to play a soundbite again from Pakistan's finance minister on the Indus Valley Water Treaty, and then we will return to you.
At this point in time, I do not see any large fiscal fallout coming out of it. And if you've seen the stock market rebound today, the big drop that we saw in Friday has been more than well covered in the PSX today. So from my perspective, at this point in time, we don't see it as a...
Ambassador, how long, can you give us any clarity how long the Indus Valley Water Treaty is going to be held in abeyance?
Well, as long as Pakistan doesn't stop cross-border terrorism, we will not kind of discuss the Indus Water Treaty with them. The day they stop cross-border terrorism, we are willing to discuss Indus Water Treaty and the other issue of Pakistan-occupied Kashmir.
Is there anything approaching a longer-term diplomatic off-ramp to the Kashmir dispute, which historically has been at the heart of conflict between India and Pakistan?
Well, there are only two things. One, it's a bilateral issue between Pakistan and India, which should be resolved bilaterally. The remaining part of the issue, which is the Pakistan-occupied Kashmir, that is the only one which is left for discussion. And third, and importantly, we want to kind of bring the perpetrators of the Pahalgam terrorist attack to book and action to be taken. So only on these three issues we are willing to discuss with Pakistan.
Ambassador, what's your message to Singaporeans looking to travel to India for business or as tourists as peak tourist season approaches in August?
I think the India growth story is still intact. Even during this terrorist attack and the aftermath of that, our focus on the economic growth remained intact. In fact, our cabinet announced a 7.5 billion skilling upgradation program last week in India. We know that Singapore is has a lot of competitive advantage in the skilling phase. So we're looking at more collaboration on that front. And the country in India is safe to travel. We don't have any issues anywhere right now. And all the flights have resumed their operations. Airports have resumed their operations. So from a safety point of view, I think it's safe to travel in India.
And the airports that were closed as a precautionary measure, of course, in the states in the north and the west, to your knowledge, are they going to be reopened cautiously?
I just saw the notification for the 32 airports that they can start operations normally.
Understood. New Delhi is characterising this as a suspension, not a ceasefire, and some towns and cities in the north and the western states have been on what appears to be almost a war footing with blackout drills and civil defence exercises. If national security now in India is paramount, Ambassador, then does the pursuit of trade deals, the pursuit of partnerships, whether it's with Singapore or with the United States, do they get pushed back, or do you feel that the government can approach this through a twin track initiative?
I think the twin track is continuing. One, of course, the terrorist attack was not expected. Number two, it happened because Kashmir was being normalized in the last 5 years. Tourism was booming, election turnout was unprecedented. So somewhere someone felt that the situation should not be normal.
So you felt that this attack was an attempt to destabilise India economically and destabilise tourism and the hospitality sector in that region?
I would rather put it this way, that it was an attempt to derail the normalization process in Kashmir, but we will not take that bait. We will continue with the process of normalization in Kashmir. On the trade part, yes, we've recently announced a trade deal with the UK. Negotiations with the US and EU are advanced stage. Negotiations even with New Zealand are progressing well. So on the trade side, it continues as usual. We had this security issue. Everybody is on operational alert, but that does not mean that our India growth story and focus on economy gets affected.
Let's talk about the big one. Is there momentum now for a US-India trade deal by Diwali? That may coincide with President Trump's visit as well.
Well, it's very difficult to give a timeline, but I can only say that officials on both sides have been meeting regularly. The terms of reference have been agreed to and have been signed, and negotiations are actively continuing.
And do you feel, Ambassador, looking at the global context now and looking at the events of the past 48 hours in Geneva, some are calling the US-China trade talks a breakthrough, the markets are rejoicing and breathing what seems to be a collective sigh of relief. Does that give you confidence of the trade deals advancing with India and the other countries that it is negotiating with?
Well, we negotiate trade deals bilaterally. What is in our interest, we put that interest first. We've successfully done it with the UK. Recently, we've done it with UAE and Australia. Negotiations with EU and US are at advanced stage, and we are proceeding with New Zealand and some countries in Latin America as well. So it gives me a lot of confidence that our trade teams are doing really well, and hopefully in this year we would be able to see more successes.
And do you think, or rather, at what point, Ambassador, do you think that that is going to create a material pickup and an improvement in FDI? A couple of weeks ago, we heard a lot about Apple. We heard a lot about Tesla possibly planting the flag in India. At what point do you think all those trade deals are going to coalesce in renewed FDI intentions, especially in advanced manufacturing?
Well, I mean, advanced manufacturing FDI is not necessarily dependent on an FTA with a particular region or a particular country. Companies who find interest in a particular state or a particular region or a particular sector are continuing to invest. Central government has come out with a production-linked incentive scheme, which has helped advanced manufacturing in various sectors like semiconductors, electronics, air conditioning, and many other sectors like footwear and textiles and apparel. So FTAs will definitely give it a boost, but it's not as if that if we don't have an FTA that FDI won't come in, because central government and state governments have their own incentives for certain sectors and certain areas.
Ambassador, it's always a pleasure talking to you, sir. Thank you very much indeed for joining us at what is a deeply challenging period in India's history. Shilpak Ambule there, India High Commissioner to Singapore. Coming up, US-China's tariff truce echoes in Asian markets. We'll track some of the reaction after this break. Stay with us. Welcome back. You're watching Inside India, some of the stories that we're keeping tabs on outside of India. President Trump has suggested that he may join potential talks between Russia and Ukraine in Turkey later this week while he's in the region. Ukrainian President Vladimir Zelensky has called on Russian President Vladimir Putin to meet in Turkey and said he would travel to Istanbul after Turkish President Tayyip Erdogan proposed direct talks. It's unclear if Putin will attend. Australian Prime Minister Anthony Albanese was sworn in for a second term after a landslide victory in the May the 3rd election, with his Labour government being the largest centre-left government since Australia's federation in 1901. He says he will prioritise dealing with the impact of the US-China trade war and global economic instability. And Indian cricket great Virat Kohli retired from the test format of the game, leaving fans and colleagues shocked. Kohli will continue to play in one-day and 20-over matches. Meantime, the Indian Premier League is set to return from May the 17th after being halted due to the India-Pakistan conflict. Let's turn our attention to the Asian markets now. In the wake of the Geneva breakthrough, as some are characterising it, between the US and China on tariffs, it's a clean sweep of positivity, somewhat counterintuitively, with the exception of the Hang Seng Index, which is down quite sharply by just under 2%, as you can see there in the bottom left-hand corner of your screen. Otherwise, a sea of green. Japan's Nikkei 225 is leading the Asian markets today. And Lynn joins us now with the top stories from the region. Lynn, we're getting reports of job cuts at Nissan.
Yeah, indeed, Sri. I mean, we are in the thick of earnings season out of Japan, and what a lot of these automakers are signalling is this extreme caution ahead given the uncertainties with the tariff outlook. For example, after markets closed yesterday, we heard Mazda's president basically saying that he is telling his suppliers, auto parts makers, that this is basically a battle for survival at the moment, and the company unable to put out the guidance. But as you just mentioned, in terms of Nissan, you've got analysts saying that that company is really dealing with a perfect storm here of headwinds and challenges. And we're hearing these multiple reports now that they are looking to double their job cuts. So a couple of months ago, it was 9,000. The reported figure now is 20,000. And that is indeed true. Sri, that's 15% of the global workforce, and that underscores the structural challenges that the company is facing, certainly on the sales front, persistently low sales in their top two markets, which is US and China. And perhaps speaking to why we are seeing these job cuts is the fact that if you look at their utilization rates, well below break even. So basically it means that the company at the moment is too big for its current demand picture. You add on top of that the tariffs, and we are waiting, of course, for the commentary to come through in terms of the earnings that will break later today. And our colleagues over at Squawk Box Europe will be speaking with the new CEO, Ivan Espinosa. As I was noting to you, of course, lots of headwinds for the automakers, but just quickly, of course, that India play in Suzuki, they also reported earnings after markets closed yesterday. And basically the picture there is a strong export picture coming out of India, but flatlining in terms of actual sales within the country.
Interesting perspective, Lynn. Thank you very much indeed for that. US President Donald Trump is heading to the Middle East to meet with Gulf leaders. CNBC's Dan Murphy filed this report on what we'll be watching out for on Trump's big trip abroad.
This is President Trump's first major foreign trip since returning to office, and his message to Gulf allies is clear. The US is back in the game. The president is essentially seeking to reassert American power and deliver big strategic deals. His 5-day tour starts in Saudi Arabia, where Trump is looking to lock in details on a $1 trillion investment pledge. The kingdom is targeting deals across defense, AI, infrastructure, and advanced manufacturing as it pushes ahead with its Vision 2030 program. Meanwhile, a US-Saudi investment forum is also underway in Riyadh, with Wall Street executives and US business leaders in tow. The goal here is to deepen commercial ties and channel Gulf capital into American industries. There's also the potential to see tariff relief on the agenda as well, but this trip isn't just about business. President Trump is also expected to discuss some of the region's most critical issues. the war in Gaza, the next phase of the Abraham Accords, Gulf oil policy and nuclear talks with Iran, all of which could have significant consequences for regional stability. From Riyadh, Trump heads to Abu Dhabi and Doha. Qatar is home to America's largest military base in the region and strategically vital as tensions with Iran remain high. And in the UAE, which is investing heavily to become a key player in the global AI race, we're likely to see a push for deeper tech cooperation with Washington, including access to advanced US AI chips. This is Trump's most assertive foreign policy push since returning to office and a clear display of his transactional approach to foreign policy in a region that is more strategic, capitalized, and globally engaged than ever before. Dan Murphy, CNBC, in Dubai.
Thank you, Dan. We'll bring it back to how foreign capital is positioning in the Indian markets after the break. Welcome back. We're counting down to the market open in India. We're about 15 minutes away. Let's give you Nifty futures for a guide. 24,935. So an attempt to nudge towards 25K. So perhaps maybe not getting there. So this is the market taking a breather after the very strong run-up that we saw yesterday post-ceasefire. The market reacting to that, applauding it, and also applauding the momentum that we are seeing in the substantial progress between US and China and those trade talks in Geneva. Where we left off yesterday, it was 24,924. So that 25K mark is critical for the Nifty benchmark. Dollar rupee at 84.6980. Meantime, China's Ant Group is set to divest up to 4% of its stake in Indian payment app Paytm for $242 million at around 809 rupees a share. That's according to a term sheet seen by Reuters. That would be a near 6% discount to Monday's closing price. We'll be watching how shares of Paytm's parent, 197 Communications, fares in trade today. It's the latest in a string of high-level exits in Paytm. And we will be keeping tabs on the pharma space in India when the markets open. US President Donald Trump signed an executive order directing drug makers to lower prices. Firms were asked to align their prices with what other countries pay, giving them price targets in the next 30 days. Trump saying he's looking for price cuts of between 59 and 90%. Many of the Indian pharma companies have a sizable exposure to North America. They sell cheaper generic versions of new drugs there. Right, let's get more on how foreign investors and foreign capital is positioning in the Indian markets. Adam Coons joins us now, co-CIO at Winthrop Capital Management. Adam, welcome to the show. So can we just start from a broad macro level? And if the US and China seem to have made a breakthrough in trade talks in Geneva, then do short-term global and EM portfolio flows pivot back to China and away from India? Or is the India narrative still looking resilient?
Yeah, I think that the narrative around India still stays strong, primarily because, look, the reality of this big push from Trump and the Trump administration on tariffs, from our viewpoint, really was directed at China. There's a lot of fluff around what they're doing in Europe and other regions, but we think that the main point of this was to really hit China and to try to get as Trump even says, a significant deal. And so a lot of the things are in motion to move manufacturing outside of China. So obviously we've heard earlier this month that Apple was going to increase their manufacturing of iPhones into India. And so just because there's a deal made, we don't think that those things stop and go back to, status quo. So for us, we think that, once again, if you look back at some of the shifts that were starting to be made after the pandemic and moving away from China with a lot of different manufacturing, pharmaceuticals being one of those. And so that has led to an increased growth in generic pharmaceuticals in India. So like I said, those things are going to continue to move in that direction where U.S. based companies are going to look for other areas to get their things made or get things done, and India is a logical place for that.
Great point, Adam. And do you feel that a US-India trade deal, a deal by Diwali, meaning mid to late October, which could very well also coincide with President Trump visiting India to redefine the Quad security alliance, if that happens, and is that your base case, is that going to supercharge that narrative that you're talking about?
Absolutely, and I do think that the base case is that deal gets done. Yeah, I think, like I said, for us, we view this as really Trump trying to get a few things moving globally to almost just narrow into China's the bigger issue. I think I don't think that is necessarily done. When I say it, I mean, China and the U.S. Going at each other from a tariff standpoint. And ultimately, I think that increases the opportunity for better deals with some place like India. So, yeah, I think that the base case is this is going to be a net positive for India.
Understood. Thanks for that, Adam. And before we get into the sectors and your allocation, India and Pakistan, this current flare-up, to what extent do you feel that could derail sentiment?
For us, right now, we're still going to go down the path that we think this is going to be a short-term conflict. We do kind of have some thoughts that China may be at play a little bit here because of, some of these tariff issues and trying to target some allies of U.S. in different places. No coincidence that some of this kind of escalation happened shortly after Apple announced that they were going to move a lot of manufacturing to India. So some of this just feels disruptive in the moment. So for us, we think that this is probably something that's going to resolve itself quite quickly.
Interesting. And you're managing your India allocation through dollar-denominated ETFs and ADRs. Financials, Adam, are a preferred play for you. The Range India Financials ETF is up over 9% year-to-date, big proxy of the economy, but there are questions about household debt. Are they manageable risks, or could they become systemic?
Well, obviously, they could become a bigger issue. I would say it's something that we're watching closely, but right now, that is how an economy grows from, emerging to more developed. Is it has to be led with debt, and that probably scares a lot of people. But if you want to be a consumption-led economy like India is, and I'm gonna fall back on, that's what China wants to be. And so when you look at China and what they want to be when they grow up, they want to be similar to the path that India is going, which is obviously towards that kind of American-style consumption, because you get substantial growth out of that. When you're an export-led economy, you're dependent on too many other players. So I think that's a great setup for India right now. And when you're looking at the financial sector, once again, you can look at the U.S. as kind of a blueprint for the reason why the financial sector has been as explosive as it has been in the U.S. and has made so much money for so many people is because of that, consumer-led economy. And like I said, that does come from a steady use of debt. And as long as that's manageable, and as long as inflation and real GDP is manageable and managed, we think, like I said, this is going to be explosive growth in that financial sector.
And Axis Bank is your top pick in the financial space, but there's been a lot of news flow recently about Yes Bank now that Japan's SMBC is its largest shareholder. Do you expect more cross-border deals structured along these lines? And how do you feel about Yes Bank in this environment now?
Yeah, we do like Yes Bank right now, and I think that is kind of one of our thesis as well with Axis, is that you could see bigger deals, and we do think that's what's on the horizon. So yes, I would also look at Yes Bank from an asset allocation standpoint. Generally speaking, like I said, we just like the financial sector. So for us, Yes Bank, Axis, SBI, those are all great places to put your money right now. Right now, I don't really differentiate a ton. That's why we do use ETFs. Obviously, as a U.S.-based investor, we're trying to take on specific themes, thematic bets within India, without being boots on the ground there. That's how we're translating that into our portfolios.
Adam, and another big thematic story in India is the rise of the consumer and the premiumization of the consumer, quick commerce. Is that the next big driver of the e-commerce wave in India, or is it at risk of becoming a crowded trade and a passing fad even? And tell us how Flipkart fits into this narrative.
Yeah, so I mean, once again, if you use the U.S. as a kind of a blueprint for investing, and we do believe long term that is the trajectory of India. Like I said, demographics are dramatically in India's favor, and so when we look at that, consumption is going to be the key leader. And so obviously I hit on that with the financials. That leads itself right into some sort of e-commerce. So yeah, I think when you're looking at what is the next Amazon in India, that's what you've got to search for. And so can it become a crowded trade? Absolutely. But like I said, there's just too much upside. It's one of those ideas where the pie is just going to get bigger, and trying to speculate on how much share different companies can have within that pie in some ways might not matter if it's growing fast enough. And I'm not saying that's totally the case, but for us, Flipkart, it's a private company right now, but we do have exposure through our private equity arm. And so we really like, if you can get in on the early stages with a company like Flipkart. Yes. And for us, this is where we see, the next Alibaba, potentially Tencent. And obviously those are just tremendous business models that are cash flow heavy. And so whether you're looking at, what's worked in China, what's worked in the US, we see Flipkart following that same type of path.
Adam, let's just round off on pharma if we can. And yesterday we had a great conversation with Erez Israeli, CEO of Dr. Reddy's Labs, and the quarterly earnings numbers look reasonable. Despite pharma being at the sharp end of tariffs, we now have Trump's executive order, so there's a lot going on in this space. Your thoughts about the sector, and how are you approaching it?
Yeah, I mean, there's still more to digest here, but still, I would say that this is a net positive. I think if you're getting the narrative that the U.S. is going to be pushing to cut drug costs, for us, off the cuff, we see this for, the large amount of generic drugs that come out of India are a way to lower costs. So we think that helps, pushing manufacturing to India, especially generic, lower cost type drugs to India, can round out the overall cost structure for U.S.-based companies. So we see it long term as a positive. I think there's some more details that we need to read through and figure out here. But ultimately, I think some of the specialty pharma is probably where you're going to see more hit from a margin standpoint, because they're going to focus more, I think, on the margin standpoint, where you have really thin margins, and like I said, in generics. I think those are going to not get as much attention, which once again I think just leads U.S.-based pharma companies to pushing that manufacturing to India.
Absolutely, Adam, and Erez said exactly the same thing, that this executive order is an opportunity for a company like Dr. Reddy's. Adam, we're going to leave it there. It's been a great conversation. Thank you very much indeed for joining me on Inside India. Cheers. Adam Coons there from Winthrop Capital Management. Right, counting down to the market open in Mumbai. We are just minutes away. We're back in 2. Welcome back. Indian markets are just joining the trading day, and we are, as futures were indicating, seeing some consolidation around this level, just below 25,000 for the benchmark Nifty 50. You remember that the market did gap high yesterday on the ceasefire and also the developments surrounding the US-China trade deals and the trade talks and negotiations and substantial progress in Geneva. So the market basically taking something of a breather before it perhaps makes a challenge on 25,000. Dollar rupee is looking quite interesting. We are seeing some strength in the rupee, 84.7090 against the US dollar. Right, we are watching shares of Indian pharma players after US President Donald Trump signed an executive order directing drug makers to lower prices. All of them responding positively. Firms were asked to align their prices with what other countries pay, giving them price targets in the next 30 days with the potential for further action if no progress was made. Trump said he's looking for price cuts of between 59 and 90%. Remember, many Indian pharmaceutical companies sell cheaper generic versions of new drugs to the United States. So this is an opportunity for them. As Israeli, who we were speaking to yesterday, CEO Dr. Reddy's Laboratories, was saying so himself. Right, let's look at shares of Ather Energy. The Indian electric scooter maker posted its first earnings report since listing on the Indian stock exchanges earlier this month. Ather posted a narrower annual loss as it saw strong demand for its Ritza scooter, lower unit costs also boosting margins for the e-scooter maker in Q4. However, the stock's struggling to find direction at 309.20. We're also keeping tabs on one of the largest cross-border investments in an Indian bank, Japan Sumitomo Mitsui Banking Corp, confirming its 20% stake in India's Yes Bank. SMBC will become the largest shareholder in the Indian private lender. Yes Bank expects the deal could lead to re-ratings by the rating agency. So let's get more on this and bring in Prashant Tapsa, Senior VP and Research Analyst at Meta Equities. Prashant, thanks for joining me on Inside India. You have said SMBC buying a stake in Yes Bank is a real bailout for growth. What then does SMBC bring to the table aside from the capital in order to really unlock value and put Yes Bank, which has been struggling since 2017, on a more even keel?
I think, yes, the real bailout is from the Japanese bank, which is coming into India right now. In 2020, when there was a real trouble with the Yes Bank financials, so Government of India chooses to have a lot of support to them by bringing in SBI and other banks on the table to support and survive the bank. But now I think the real stake has been sold to a great partner, Japanese bank, which will bring a lot of value unlocking in terms of culture, in terms of innovation, in terms of bringing business. And I think that is the main reason why I think SBI was looking to exit, and because of no focus on the culture, no focus on the products, as well as corporate focus, as well as the retail business banking. But I think SMBC will bring a lot of things on the table, which will help the company to get some kind of re-rating, which will help them to raise funds and even lend a better rate in the Indian market. So I think this is a great deal, but not on immediate terms, but it would be a long-term strategy.
CEO Prashant Kumar says this deal will remove investor uncertainty, strengthen the balance sheet, and could mean a ratings upgrade. Are you as optimistic, Prashant? And how long is this going to take? Because this is going to be a big undertaking. It's a big ship to turn around, yes?
Yes, I think it will take 6 months to 9 months from the current levels. Once the deal is closed, then all focus would be on the earnings. All focus will be on the game plan of the new stakeholder. SMBC will have some kind of strategy to go forward and bring in a lot of business. Mainly focus would be on the corporate business, which is missing in the Yes Bank right now.
SMBC will meet with the RBI this week. Is this a deal that is on the path to clearing the regulatory obstacles and hurdles? Is all of that a formality? Or is there any potential issue arising from a foreign buyer involved in an Indian bank that may require perhaps divestment, or have all those hurdles been cleared, more or less?
I think SMBC want to clear the RBI, the Indian central bank, to have a lot of long-term partnering in the Indian banking system. I think they will be guiding the RBI, their game plan for next 2 to 5 years. So I think the meeting will give a lot of confidence for RBI as well as the Yes Bank shareholders for having a strong partner on a long-term strategy. So this meeting is very important. Even the regulatory approvals are pending, but it will take its own time. I think it will take 3 to 6 months to get these clarities.
There are expectations that SMBC may raise the stake further in 2 tranches by another 31%. Is there any substance to this, Prashant? And what would be the strategic rationale for doing so?
I think, yes, they are currently buying almost 20% of the stake in the Indian bank. But I think there's a good room for rising their stake going forward. Considering the approvals and all, I think 25% is the first hurdle for any banks to have a promoter kind of larger stake, which will also trigger the open offer in the market. So obviously they have kept some kind of room for 4 to 5% from the very near-term opportunity. But again, I think there will be a good rise going forward. I think after 1 year of completion of these strategic deal, there will be a good increase in their stake. But obviously, their focus is to be in India for a long term, and obviously they should go beyond 25 or even more than 25-30.
To what degree was asset quality on the balance sheet a cause for concern at Yes, Prashant? And clearly this is probably what motivated the entry of SMBC. And to what degree do you expect the asset quality in the balance sheets to be cleaned up as a result of this investment?
If you see last 2-3 years, I think the books have been better and better quarter on quarter. So it was a very bad situation in 2021, 2020. But I think now a lot of bad books, bad debt has been sold off and it has been already cleaned. So I think now the growth is very slow. I think we need a partner like SMBC, which will bring in a lot of focus and aggressiveness in the banking system that will bring book better going forward. Again, quarter on quarter, I think that will have a very positive impact. If you see last 2-3 quarters, I think the numbers, the CASA ratios, the asset quality has substantially better and better. So I think now at this point of time, SNBC taking stake is a great point of time for a turnaround.
Great point in time in turnaround. So do you think SMBC, as the largest shareholder in Yes Bank now, are going to push for any changes at leadership level, at C-suite level? And is this a deal that means perhaps, I'm just speculating here, the back office, are jobs going to have to go as a result of this?
I think
are they going to make a leaner operation?
I think there will be a lot of big changes in the top level management. I think that would be the focus of the new largest stakeholder. They are coming with 2 board seats, and I think those 2 board seats will have a lot of voting rights that will push the management for a big change. I think there is a need of a change in the management as well as in the great focus going forward. So I think after the completion, maybe 6 months later, there will be a change in the top level management, which will bring a lot of confidence in the investors community.
Does Prashant Kumar as CEO stay on?
I think yes, he has also said that I think September is the last month for him for retiring. So I think it is matching the time of the next 6 months and then again taking over by a new great leader. I think a good name will help the management to do good in going forward.
Do you expect more cross-border deals, Prashant, along these lines in the Indian banking sector? And if so, what has got a takeover premium or M&A premium on it?
I think we have been seeing a lot of deals happening in the Indian banking system as well as in the NBFC space. So I think even this would be the largest banking deal in last 1 decade, which will give a lot of confidence for any other foreign companies to get into India. I think banking is the one sector which is called as mother of every sector, which will give a lot of growth going forward. I think the way how economic is growing the fastest, almost 6 to 7% in terms of GDP growth. I think banking sector will attract a lot of such deals after this gets completed smoothly. So we need to watch how smoothly this transaction goes forward. So I think that will help a lot of other financial institutions to come to India.
Prashant, final question. Does Yes Bank build out the fintech stack? As you said, innovation could be unlocked through SMBC's entry. What do you think that looks like?
I think Yes Bank was known to be a great innovator in 2020 before the bailout plan. I think that will be the highly focused with respect to technology, with respect to they need to match the industry standards. The way how Axis Bank, ICICI Bank, HDFC banks are doing great in terms of technical technology, innovation, upgradation, and even innovation in the product style is also most important right now. So I think SNBC has that kind of strategies, that kind of experience, which they will bring into Indian books. I think that will help Yes Bank to go very fast. I think they needed to match the growth of the industry standards.
Prashant, great conversation. We'll leave it there, sir. Thank you very much indeed for joining me. Prashant Tapsar there from Meta Equities. That's it for today's programme. Tomorrow we will track India's trade talks with European Union. Samir Kapadia of India Index joins us, and also we'll talk about investing in India's fintech sector with QED Partners. That's all the time that we have today on Inside India. Do keep watching CNBC. Dan Murphy is up next with Access Middle East.